This is the last of 4 presentations by the University of the West of England, UWE Bristol, about fees and funding for undergraduate students. In the previous presentations, we've looked at the funding you're entitled to as an undergraduate starting in 2017-18 and how to manage your student budget. In this presentation, we're going to look into the terms and conditions of your student loan, how you repay it, when you become liable to repay it, and how long you'll be expected to repay for. Let's take a look at a typical student loan debt. Here we see the tuition fee loan of £9,250 for each year of study, and the highest available maintenance loan, meaning the student is borrowing £17,680 a year. After a 3-year undergraduate course, this becomes a debt of over £53,000 plus more than £4,800 of interest, which starts to accrue from your first instalment. While you are studying, the interest you pay is the Retail Price Index, or RPI, plus 3%. So for the year 2016-17, the student loan company set RPI as 1.6%, so students are charged interest at 4.6%. You become liable to start repaying your student loan the April after you graduate, at which point the interest rate becomes variable, and it will depend on how much you are earning as a graduate. On this table, graduate salaries are down the left-hand side. It's your gross taxable income. On the right-hand side is the variable interest rate, which as you can see increases as salaries increase. Once your salary reaches £41,000, you'll be paying the maximum interest rate of RPI plus 3%, the same as when you were studying. So for the year 2016-17, that is 4.6%. The threshold to trigger repayments on your student loan is currently £21,000. If you're earning below that threshold, you won't be required to make repayments, but your loan will still accrue interest. Once you earn over that threshold, you'll start making repayments. Looking at the second row in this table, for example, if you were earning £26,000, you would be taking home £1,737 a month after national insurance and income tax. Of that, you would pay £37.50 a month in student loan repayments. This is the equivalent to £450 a year. In this table, it is only the salaries of the final 2 rows, £46,000 and £56,000, where the repayments are higher than the interest being added to your loan. So we'll now look at how much your degree will cost you in total. This will of course depend on interest rates, changes to the earning threshold, and your own earnings. You have 30 years to pay off your student loan before the remaining balance is written off by the government. This table shows you how much you would pay off if all those factors remained unchanged. You can see if you earn £36,000 a year for 30 years, you would pay £40,500. If you always earn under the £21,000 threshold in the 30 years after graduation, so the £20,000 row in this example, you would not pay anything back. For more information about student loans, take a look at the links below. MoneySavingExpert.com provides a useful independent review of the financial support you're entitled to, and also has a repayment calculator, so you can calculate what your own repayments would be. That's the end of our presentations on fees and fundings for undergraduate students. Once you've applied to UWE Bristol, if you have any questions about your finances, then please do get in touch with us through any of the channels listed in the descriptions below.